Welcome to today's session of 20 for 20 in 2020. This is a special series that I've created to ask 20 questions of 20 professionals that you may wish to choose to help you with the important decisions you make in your life. And I plan to complete this process before the end of the year. And as you may know, I'm Ella Newman. I'm a trusted insurance advisor with the Norton Advisory Group, and I help individuals with creative solutions to various insurance-related decisions that they're going to make connected to estate planning, business succession planning, retirement, long-term care, and various other insurance strategies that we have creative ways of approaching. And today, I'm going to be talking to you later at the end of this session about some important things you need to know about what's going on in the insurance industry and something that I'm going to offer you. So please do stay tuned. But today's professional is a gentleman I've known for many years. His name is Marty Greene, and he is the founder of Greene Valuations, which works on business and other intangible asset valuations. I met him a good number of years ago at an estate planning council meeting in New York, and we've sort of stayed in touch after all these years. So today I'm going to find out and let you find out more about his practice and how you can work with him. So Marty, how are you doing in this crazy pandemic time we're in?
Well, personally, I think we're all struggling with mask and social distancing, but professionally, this has become a very good time for business valuators with the changes in the possible changes in the gift tax law. People are anxious to make gifts, so it's from a business point of view, it's good. However, it's a very difficult time for all of us.
Right, I understand that exactly. And that's creating some activity on my side as well, because we help people with some of those gifting strategies also. And that's why your business is tied to mine in some ways, because we do ask for valuations when we're working on that. So let's get started with our 20 questions. So my first question is, what is the primary focus of your practice?
Well, first of all, let me thank you very much for having me. And as you know, I'm a practicing CPA, and I have a concentration in business valuations. Business valuations can be done for a variety of reasons, for matrimonial dissolution or a business breakup. But I concentrate on business valuations for estate and gift tax purposes. And I also do valuations for if somebody is going to have a charitable contribution of a business interest for income tax purposes. It's required that the interest be valued for larger business interests. I also think that's where we met. I think you just alluded to that. You've been very active over the years in the New York City estate and gift tax community, and I think I've known you for quite a long time, and I don't think you've changed at all.
Thank you. Appreciate that. You haven't changed much either.
Oh, I don't know about that.
In any case, well, let's get on to our next question. And seeing that some people may not be familiar with business valuations, can you describe what that actually refers to?
Yeah, that's a great question. I think it's always a great place to start. If a business interest is sold and there's a buyer and the seller and they agree on the price and the terms, we know what that interest is worth. But sometimes that interest is not sold and it's transferred, and it could be through a business dissolution or a divorce, or for estate and gift tax purposes. But and if it's a publicly traded stock that's being transferred, well, you can do research and you can look on the internet, and we kind of know what the value of those shares are. But if it's a privately held company, you can't find it on the internet. You need a business valuation, and that's the service that I provide. And very often, sometimes we're not dealing with an entire business, which creates new challenges. We deal with fractional interest of businesses. So, that's a broad description of the business valuations.
Right. So you stated earlier that you focus on estate and gift and income tax valuations. Do you prepare valuations for other purposes as well?
Well, that's business valuation. It's often assumed by the public that if somebody prepares business valuations, they can do a business valuation for any purpose. Uh, it could it could be for, but however, what we find is that when we do business valuations, they are usually under the auspices of an administrative matter, like with the IRS, or each if the valuation is ultimately going to be tested in court. Courts seem to have their own guidance as to what the standards are for that business valuation, and so therefore it could be a terrific business valuation, but it has to meet the standards of the particular court that could be challenging the valuation.
Right. So can you give an example of an instance where a business valuation may be treated one way but for estate tax or gift purpose it is not acceptable for the courts?
Yeah, I think that's one of the things that comes to mind as, of course, it's not a state in gift, but it's, for example, a minority interest discount. If it's a shareholder dispute, we would never have we don't have a minority interest discount, but but certainly for other purposes, we would. Regarding estate and gifts, one thing that comes to mind is years ago, let's say about 20 years ago, it changed. But before that time, um, let's say a regular corporation would pay income taxes, and if we were doing a pass-through entity, we might accrue income taxes to make the pass-through entity comparable to the regular taxed entity. And what we find, and what has happened though, tax court has said about 20 years ago, they said that we shouldn't be accruing income taxes on those entities. And by the way, what I have found though on income tax audits, sometimes people will accrue taxes and the IRS accepts it, even though the court says not to. So, but that's certainly an instance that where for some purposes you may want to accrue taxes, but for estate and gift tax purposes, the court has said not to do that.
Well, it's great that you're knowledgeable in that area, and these kinds of understandings must have intrigued you at some point, because I wanted to find out what led you to this career path and sort of and also what credentials you had created or achieved to get to this point.
Yeah, I started out, doing, traditional kind of financial statements and tax returns, and a client had an estate and gift tax matter that required a valuation, and I was very, very interested. I got interested in the product and the calculations that were done to determine value, and from that point, I started taking some courses, and I got interested in business valuations. Also, you asked about my credentials. I hold two credentials. One is the AICPA. Since I am a CPA, I hold a credential of ABV. And then as well, I have accreditation from the American Society of Appraisers. And that credential is quite difficult to get. It requires taking 7 exams and submitting courses for, I'm sorry, submitting reports for peer review before to getting the credential. Also, a number of years ago, I was grading exams for other candidates.
Wow. Well, that certainly means that you're very qualified and very focused on that. Now, what led you to work and create your current career? Your current
Um,
firm, I meant to say, not career, but your firm.
it's um, one of the things uh, about getting work at my firm is that you or an attorney or a CPA, of course, this was pre-COVID, would meet with clients or give lectures or presentations to the public or people who had interest in estate and gift tax matters or had a need for the service. But but I, as a business valuator, um, usually rely on you to recommend me. So I always look at my client as not the client, but the referral source is my client because I'm going to hopefully get new valuations from that person. I find with estate and gift tax matters, you know, people don't wake up in the morning and say, "Yeah, I got to go get my business valued today." They do it because they have a particular purpose. They need it for a estate, if they're for gift tax purposes, or if somebody passes, the decedent needs their interest valued. So, but it's usually done for a particular purpose. And one of the things that I also do is I tend to do a couple of audits with the IRS. And I'm kind of pleased that I get I get referrals from not only CPAs, which I'm proud of, but I also get valuations from other valuators. And I think
Mhm.
I'm somewhat most proud of that because it's, because I do a fairly technical valuation, I'm glad to be able to help them. And
Right.
I, you know,
Yeah, well, obviously your peers respect what you're doing. If they're coming to you and they're all capable of doing similar type work, they like the way your approach is different from theirs, and that's very important. Now, when you're working with these various entities, do you find that sometimes these reviews that you do or valuations that you do require updating, or is there more than just doing a one-time process, or is it require periodic coming back to it to provide updated reviews on valuations?
well, generally what happens is once somebody transfers the property, once I do the value and the property is transferred,
Mhm.
people don't usually come back to me and say, do it a second time.
Right.
So it's not that I usually have a client generally doesn't ask me to value multiple times, although sometimes I will have a ongoing kind of client in the area of brats because of sometimes those interests
Mhm.
get valued over a period of time. So usually there isn't that type of repeat business with a client. Once it's transferred, they generally don't need my service. Although very often with gifting, I have found that frequently I'll be asked to calculate the value and estimate what the gift, and then later make the gift based upon my estimate, and then I do a comprehensive valuation.
Right. Okay. Now, when you approach these valuations, would you say that your approach is very conservative or more aggressive?
I think that's a great question because obviously people will come to me and they assume if their gift or or estate is subject to tax, they always want the value lower because they're going to pay tax. So they always want to. However, sometimes that's really not in the client's best interest. And and let me kind of explain why. If somebody is going to take a tax deduction, they can pretty well estimate how much tax they'll pay, maybe how much interest they'll pay if they're audited, And also maybe they're really willing to risk the penalty, and if their preparer is willing to do it for them, they will take a tax deduction. A business valuation is very different, because if the return is audited, or the gift is, or the transfer is audited, if it's an estate, the IRS usually comes back with a very, very large difference in value. And so therefore it's in the client's interest, although to have a very comprehensive, very accurate business valuation. One time, one attorney told me that he estimates 50% of his estate returns are audited. And so, so there's a big risk. And I find that, doing valuations that are subjective puts really the client at risk. So I really try to do a very comprehensive, accurate valuation. And sometimes, you may say, oh, well, that means it's going to be a higher value or something. It may not, it isn't, that's not really the case.
Right, right. Well, so what is your experience in dealing with the IRS, and can you represent your client if they're audited?
Yeah, that's a good question, because obviously being a CPA, I'm familiar with dealing with the IRS. I've dealt with the IRS for a number of years. So either but I know that other attorneys have told me that some valuators, some valuation firms are really reluctant to represent them on if the evaluation is questioned. And I'm very comfortable with that. I'm very comfortable working with the IRS. Maybe it's a question that because I've been a CPA, or maybe I'm not smart enough to be afraid of them. I don't know, but I've been, I really try to focus my, where a lot of people who do valuations tend to take the valuation and say, I want to focus on the referral source, I want to focus on the client, and I want to make it a report that they understand. I think my job is to make a valuation report for the IRS, so it's designed for that audit.
Oh, that sounds very important. Yes, it sounds like that would be very effective. So besides that, what are some other types of problems or issues that you help your clients address?
What comes to mind is that very often people assume that somehow the value of a business is based on historical financial statements or tax returns. That if whatever my income was last year, that has something to do with the value next year. And really, business valuation is based on an expectation of future results. And what that means is that if we're going to do a evaluation, we really need to have the client, or really need to focus on the value drivers, or what changes value in the future. And I find sometimes that becomes a kind of a challenge in working with the client, so they understand what's needed to properly value their business.
So the next question is sort of what type of clients do you tend to work with?
Obviously, since I do a lot of estate and gift tax valuations, I obviously focus on clients that have estate and gift tax needs and requirements. But sometimes I think that, and you may have come across this in your work, where if you're dealing with a client feels that if since the estate tax exemption currently is $11.5 million, people think, well, I don't need estate planning unless I have more than $11.5 million of assets, and that's really not the case. And I find that for example, for valuation purposes, for example, New York State, it's over half of that, over $5 million. And also, there's another reason for a business valuation. If the business interest is going to be sold after, let's say, a decedent passes, having a valuation can be very important because it's the value as the step up in basis. It's going to be the value at the date of death. So it can be very important, even on a non-taxable estate, to have some of these business interests valued.
Right, that makes sense. And we find that we do find a need for valuations because we are often helping people trying to move assets out of their estate and into trusts and moving them forward to the next generation. And we're looking to get them some deep discounts as well from the IRS and in other situations. And the way we do that is by providing a good valuation for them to look at, for the IRS to look at and to work with. So there's a partnership between the kind of things we do to help our clients and the kinds of things you're doing as well. Now, moving along on this, how do you determine your fees and what do they include?
Usually, my fees are my fees are hourly, and it's based upon my time and my billing rate, and or my assistant's time and billing rate. Although on certain assignments, I will cap the fees, and so in those cases, it's either the maximum fee that what we agreed on, or if my time is actually less, then I'll charge the lower amount, whichever is lower, my time rate or the fixed fee amount.
That's fair. Okay, the next question is, what are some highlights of your career experience?
I guess it's I would think that some of my highlights are, maybe a successful IRS audit, or a situation where I, had an opportunity to speak at some conferences. I think that I also think that it's sometimes I think I like to think I can help people in this regard. Usually, and I think you realize this as well, is that when, particularly if someone's going through an estate, or in a family member has passed, this is a very, very complicated situation. You know the filing of an estate return and the valuation process, and I really try to make the process as comfortable for clients as possible.
Mm-hmm. Well, that's important. That's really important. What are several valuation topics that you have written about or spoken about?
I have um, two areas. I've written. I have a kind of a niche where I kind of value real estate holding companies, and what I say about that is they are, according to tax court, they have the guidance that tax court has is very, very different than what the public will think of how to value a real estate holding company. And I've also written on marketability discounts. Both the IRS and tax court suggest using restricted stock, and those are stocks that can't be sold to the general public. So therefore, when they are sold, they're sold at a discount, and they can kind of compare that discounted price to the actual market price, and that becomes our marketability discount. But I've kind of written on this on a way of comparing these transactions over 30 years, and then kind of comparing it to the subject company. And and it's been rewarding because I've seen other people use my models and reference my work. So that's kind of rewarding. And those are kind of two areas that I both written on, and then I eventually lectured on those two areas.
Well, that sounds terrific, and I'm sure those are important topics, and people now know where to look for information on that. What can your clients do to help you with the work so that they can keep their fees down?
Yeah, I think I think in dealing with business valuators, it's we all seem to struggle with this, is that I usually prepare a list of the documents that I need when I start an engagement. And sometimes the documents come so slowly, and rather than they try to collect them all at once and provide them, they kind of dribble them out. And then I tend to have to start and stop, and it really can sometimes increase the fee unnecessarily for them. So it's good that they can just look at the items, see what they have, and if they exist, try to provide them all at once.
Right. Well, that sounds logical. That makes sense. What are some of the misunderstandings about business valuation work that people have?
Um, I think what I find is that sometimes it's people assume that if they want to sell their business, they can go to a business valuator, and the business valuator will tell them what their business is worth. And that's really not what a business valuator does. If a business is sold, generally a business can be sold to a competitor, or or someone who wants to vertically integrate in the industry. So you so the so there's no way a business valuator knows that person in the industry and knows that's what the business will sell for. Um, it's business valuation is much more of a hypothetical uh, type of process, because, by the way, that type of situation will generally deal with a much higher value. And that's not what we need to do when we do a business valuation. We need to kind of value the business the way it's being run, and not come up with the actual buyer, but a kind of a hypothetical buyer and seller.
Mhm.
Sometimes, though, if a business is being sold, we will. Sometimes, if a business is being sold, we can come up with some estimates based upon some criteria that the client gives us. But generally, if we're asked we're not there to value the business. We're not there to value the business and tell the client what the business is going to actually sell for.
Right. That's very important, and one of the things we experience, we help people with business succession planning, is that people have to start thinking about these things way in advance. We'd like to talk to them 10 years before they're actually ready to sell that business, to get an understanding of the value and what components are involved. And, the kind of work you're doing really makes sense for this kind of strategy. And
That's a very interesting point, because that gets back to what I said earlier about the value drivers.
Mhm.
If you know uh, sometimes, like, for example, if you're dealing with a business that is that is kind of a job shop that makes a particular product. Well, if the owner dies or leaves the business, it won't be able to continue that way. But if that business can be turned into something that can make repetitive kind of product, then the business becomes saleable. So those are the things that not dealing with what necessarily what we can do some computations as to what the difference in value could be. But those are the things that you're absolutely right that they must think about, and you can't turn a switch and do it in a month or a year. It does take the 10 years that you allude to. And that's
Exactly. So
yeah.
that's why in our next question, I was going to say, what's it like to work with you initially and in the long run? So do you get involved a
Well,
certain way over time?
generally, I think that you know, again, where usually I'm not dealing with the individual over a long time. It's usually I'm dealing with the referral source over a period of time. And so it's a little different. So it's kind of a different kind of process. It's a different kind of. So I usually generally don't deal with clients, long term.
Right. It's more transactional to the
Yeah,
process. I
exactly.
understand that. And now, what is your valuation philosophy and valuation planning priorities? And will these maximize tax savings?
Um, I think that I guess the thing that I can say, and I really think this is, it may be kind of repetitive of what we said before, is that the way I help the client the best is prepare an accurate valuation. Is that and what so that's kind of my philosophy, and I try to build into I try to avoid subjectivity in my reports as much as possible, because if the evaluator comes up with an opinion of 10% of 20 of 30%, the IRS says 10%. So I try to pull out as much subjectivity as I can, and and I also try to follow what the court has said on certain issues. By the way, I always like to, whenever I say something about a court case, I always like to say I'm not an attorney. I don't interpret law, but I'm an expert on valuation. I know valuation methods that are kind of described in the court cases. I, I and so I can understand that. I can understand where they get their data from, and I can apply that to my client. And it's not the amount, it's the methodology. So I could use the same methodology and come up with a different number, but I'm not an expert in I'm not an attorney, but I am an expert in valuation. Something that comes to mind with that is that about following precedent or what's been discussed in methods that have been discussed in prior court cases. A case comes to mind where a evaluator came up with a value of the interest. It went to court. The value probably wasn't right or wrong. It was probably a correct value, but because he used the wrong method, the value came, the court ultimately decided on a lower value, and he ultimately ended up hurting his client by using a wrong method. So I find that's my philosophy of trying to really help the client follow the court. Try to take out the subjectivity in my reports.
That's great. That sounds like the approach that makes the most sense and benefits the client the most. What types of creative tax or business planning advice do you offer your clients?
Well, I think that what I like to do is I think in planning is I really kind of consider myself an educator. I educate the client, I educate the attorney, I educate the CPA, and I also, surprisingly enough, I educate the IRS, and I think that's kind of my role. That I'm really an educator, and I try when I deal with the IRS to try to have one-on-one meetings, try to understand what their issues are, and try to see how I can help them through that process. And that's kind of the way I think I help a client the best. I think that's the way I help the client the best by working with the IRS or explaining what I do for the client or for the professional that he or she is working with.
Well, that makes sense. That really is an excellent approach that would be one you'd want to find in a professional like yourself when you're working on these types of things. Mm-hmm. Believe it or not, we're up to our last question, Marty, and I want to ask you to tell our audience something about yourself that they would not find on the internet about you.
One of the things I think that I have a kind of a small shop. And sometimes in larger shops, the contact person is not the person that ultimately does the work. And I kind of think that being able to be, since I'm integrally involved in the process and the valuation and the meeting with the client, I tend to think that I kind of like that approach, and I like that's the way my business is kind of operating. And sometimes I think in larger organizations there could be a loss, between the person who's bringing in the work and the kind of the person who may be doing the work.
Mm-hmm. Well, that isn't something about yourself personally that we wouldn't find out on the internet. So what can you tell us about you as a person that we wouldn't know otherwise?
That's a tough question. I don't know. I think if it's not on the internet, I hope it's better that maybe it's not known. I don't know.
Something personal.
Oh, something about me personally.
Yes.
I have a fascination with old cars.
Uh-huh. I see. That's great. We wouldn't learn that.
No,
So,
but
do you have a collection of old cars?
well, unfortunately, my collection is limited to one, so
Okay.
that's enough.
What kind is it?
It's a Triumph.
Ah,
It's a TR6, two-seater sports car, and
terrific.
it's it's something that keeps me busy.
What color is it?
Yellow.
Oh, perfect. That's great. Well, thank you for sharing that piece of information. Now, more importantly, can you tell the audience what's the best way to get in touch with you?
Well, I think the best way, and I also like to tell people this, that if they have an issue, and they want to discuss an issue with me, I'm free to discuss and ask their questions and kind of advise them. I realize that I talk to somebody doesn't necessarily mean it's going to lead to an assignment. Maybe I can direct them in a way that will help them. You can reach me by phone. It's 212-244-1800, or I have another number, 914-579-2500. I like zeros. Um, you can reach me on the internet, or you can reach me by email. It's mgreene@greenevalue.com. All
Can,
the words have e's at the end.
right, spell green so they know how that's spelled.
Okay, it's Greene.
Right, perfect. Okay, want to repeat those phone numbers one more time so they have them?
Maybe I may have been too quick.
That's okay.
It's 212-244-1800. And the other number is 914-579-2500.
Perfect. Okay, well, that was wonderful, and I thank you for that. And now I'm going to go back to what I talked about in the very beginning, that there have been some important changes in the insurance industry right now as a result of the economic environment, interest rate changes, and people need to be aware of that. So I'm offering to provide a complimentary review of people's insurance portfolios, and if they'd like me to do that, because it's really important, because of these changes, the insurance companies are changing their pricing. Um, Actuarial tables have changed in the last few years. So if they've been holding on to particular types of policies, those policies may not be performing in the way they should be, and they need to be looked at. So if you'd like me to provide a complimentary review and have a complimentary meeting, we would do that virtually. Please reach out to me at ella@nortonadvisorygroup.com, and I'll be happy to set something up with you. And in the meantime, I'm hoping you will be looking for my next and past versions of 20 for 20 and 2020, and that you will reach out and look at Marty's website to see more about his firm, Greene Valuations, and himself, and at my website at Norton Advisory Group. And in the meantime, also keep looking at LinkedIn, where I will be posting this video and potentially other places as well. And we're into the holiday season, so most importantly, stay healthy and enjoy the coming holidays. And we look forward to catching you in the future. Thank you so much. Thank you, Marty.
Thank you for having me.
My pleasure.